DIA Kim here with the Traders Club. Welcome to the market update. I am recording this intraday. Market should be open another, let's see, two hours as I record this video. Market should be open another 2 hours as I record this video. So you should be seeing some flashing lights on your left. Let's continue with our analysis. Let's start with the Spyder, Diamond, Qs, the Russell, Semi, and the banks, and we'll call it a day. Let's kind of follow up with what we've been talking about the last week's analysis and market forecast. Last Friday was, when was that? 22nd. So 22nd. Oh yes, I remember. It was this day. I haven't adjusted my chart since last Friday because I want to kind of look over these levels with you guys. So we talked, this was last Friday right here, right? This was when we saw that flush after that gap down, right? And that was the level that we've been talking about. We also talked about the gap area, right? We talked about their small gap area. And something that we talked about, something that the or cautionary potential outcome we talked about is we didn't want to see a distinct gapping down where we see this as island top, right? We didn't see that, and that's a good thing. Bulls made sure that we didn't see that and made sure that we protected this level. Last week, we threw in 279, 278 was a level of a pivot or of a support because, remember, I talked about these gaps. We track gaps. If you've been following me on Twitter at 2K Kim, or if you've been watching my videos, we know that we track gaps here. Because the gaps could provide, what the gaps can do, it's going to provide support. It's going to slow things down. Even though we saw this big down day last Friday, after this gap down, what made this severe selling pressure to slow things down? It was the gap area, right? We saw this gap getting filled, and that's precisely where we stopped last Friday, which is coinciding with that 20 MA. And then we continue lower a little bit. We slide it lower, but we slowed the selling pressure down and we filled another gap. So look at these gap as a cushion, right? You know, this thing's falling and then we go through the first cushion, boom, right? So we saw this gap getting filled. We stopped right at that level. Next day, which was Monday, right? Monday pulling back and continue to slide lower, but we feel that little tiny gap. So those two gaps acted as support. We gapped up on Tuesday. Wednesday, we pulled back, retested low. And then a Thursday, and then a Friday. So all this happened throughout this week. This grinding higher action happened after filling those two gaps, right? That has been opened by the bulls and has been really deployed just so that if we do see some shenanigan, that these gaps could provide a support for the bulls, and that's exactly what we saw. And then we talked about last Friday that I am expecting some choppy market, and that's kind of what we saw here. Even with the choppy market, bulls continue to bring it right back up here. So let's, what we're gonna do is we're gonna get rid of that box, so because there's no more this thing right here, we're gonna remove that. There, right? Because there's no more gap. The gap has been filled. But definitely that level did act as support. So let's do something like this, right? So we know that 278 we held. But did we open a small gap today? Let's go to 65-minute chart and find out, is the gap still open? Yes, right? This is where the gap opened. It did come down, right? It did come down. This was where the gap started, right? This is where it closed yesterday. We opened here, right? And then next hour, this is the first hour, second hour, bears trying to bring it down to fill the gap, but it wasn't able to completely fill the gap. So the gap actually remains open, the partial gap. This is actually a bullish signal in the minor term. In the short term, keep in mind, this is, we're analyzing now 65-minute chart. So this is I call it a micro term since, you know, I guess the way I analyze things much longer term, right? So in a micro term, that's in itself bullish. So that's probably one of the reasons why we saw this thing. You can see as of now, we're seeing some dip buying happening here. And we're obviously, as of now, I'm not sure how it's going to close, but I think it's going to hold up here. And this gap area is still open. So what we can do is can do that in the short term because that gap area remains open there. So go back here. So we can do throw this here like that. So we got downside gap though, right? So this downside gap and then we got small up gap and there's gonna be a battle of this short-term gaps now. So going into next week, you know, what bulls want to see is bull want to fill this gap, right? We don't want to see, bulls don't want to see a selling pressure coming from that level. So we want to go up and fill it. And once the gap gets filled, what is going to happen? It's going to act as instant resistance. So we may pull back to challenge this gap area again. Or if the bulls really want to speed this thing up to the upside, go up here and gap it up and turn this into an island bottom. But again, you know, and this is island bottom right here, right? So we saw gap down, gap up, and how fast it got up here in that week once we saw that island bottom. And same thing happened right here. This is island bottom. Gap down, gap up, boom. Another island bottom. Gap down, gap up, boom, right? Island bottom. Gap down, gap up, boom, right? Can we do another one here where it go up, gap up, right? And then continue higher? Maybe. We'll track that next week. And if I see something, if I see that we have island bottom, I'll tweet it out on my Twitter account. But I'm kind of leaning towards to kind of struggling in this vicinity. Like it's struggling to kind of maybe come down some shenanigan. I'm kind of still in a camp that there's gonna be some shenanigan. I don't think we're gonna see smooth move for a while here. Maybe several weeks. It's just the market saw a really good move here. You know, last several months. You know, with a swift move, and I think a lot of people are starting to think that this might gap back into bullish uptrend, starting to chase it up here. And the market is going to make sure they're going to pay for that. You're going to have to pay for that. You want to wait until things get quote unquote safe and you know kind of chase this move after market has already moved 20%. You're going to have to pay for that because now you know things going to be not as smooth. Look at this move here, how smooth this move has been, right? Now things going to be a little bit more difficult because now everybody wants to get back in. Now everybody is thinking about, you know what I mean? I mean, bears' spears been getting crushed, right? And bears are very stunned at this point, pretty much dumbfounded. Like they really did not expect. I mean, nobody really expected this to happen this fast, this quickly, to gap back up to 280 level, and even clearing above it, right? I mean, this was a level where we saw that flush, and then finally we saw kind of violent move on Friday, and now week later. We're pretty much where we opened last Friday. So let's track this level here. You know what I'm going to do actually? I'm going to do a short-term level here. This is what I'm going to do. Like this. This is going to be a very, very short-term, micro-term support. 280 to 280. Right? 280 to 280. Right? Let's look at those levels. Let's see how the market deals with 285 and 283, this gap area. Again, bulls want to see this gap getting filled. Once that gap gets filled, we're going to see resistance. We're going to see market pulling back. And then when the market pulls back, it will be then a retest of 280 to 280. At the time, we have to see, again, if this thing comes back and gaps it down, then that's going to be another island top. So a lot of gaps happening up and down. So let's follow up next week. Let's see how the market deal with this level here, and we'll go from there, right? Let's go to diamond. Right, so diamond. So again, I haven't changed anything on my chart since last week's analysis. and we definitely saw that 50 MA acting as support. We've been talking about 50 MA on the Dow for quite some time now, because you can see how 50 MA scooped up this level here. We saw that that 50 MA acting as support. Market moved up, pull back to where? The 50. Market got up here, pull back to where? The 50, right? So you can see we're pretty much doing this now. Kind of a symmetrical triangle pattern, right? This is known as continuation pattern, but that I wouldn't completely rely on it, because what you're gonna see many times, it's gonna go up and then do this, coil it up, and people are gonna think that, oh my god, this thing is breaking out, and you go long, and then you place your stop right here. This thing pulls back, take your stop, and then you go back short, goes right back up. Or this thing looks like it's gonna break down and then do something like that. So don't ever try to time the breakout perfectly, because it ain't gonna work. But just look at things more as a whole like this, and as long as we get into a proper higher lows and higher highs, we can continue with this intermediate term uptrend there. And this is a good thing. After a 20% move, how much did the diamond move since the December lows? Yeah, 21%. After 21% move just in short 3 months, it is a good thing to see a consolidation, to digesting its gain. Instead of seeing a violent down move, like we're seeing a resting pattern, we're seeing consolidation, we're seeing digestion, right? We had a good move, let's rest a little bit and then continue higher. But it always gets tricky though when you're seeing symmetrical patterns, because then everybody can see this. Remember we've been talking about this. We've been talking about how market does not like it when you think, you understand the market because of some of these patterns, right? On Twitter, for a while it's been going around these cheat sheets, right? This quote unquote cheat sheets. Those things does not work. Only amateurs look at those cheat sheets and you're like, oh, go long right there and place your stuff right here, and then this thing just comes right back down. Take your stop and you think that's a false breakout, and then it's a trap, and then you go back short, goes right back up. So instead of trying to do that, because the market's too savvy, market's too insidious for you to, sometimes it works out, but most times it doesn't. So don't rely on those patterns. But all in all, like looking at things more of a broad sense, this pattern is bullish pattern. This is bullish signal. I don't think it's gonna be a smooth breakout. Sometimes it does. Sometimes it breaks out and smoothly and then continues higher. But more often than not, it's gonna have some shenanigan and shake some people out before it resolves to the upside. So keep that in mind. Looking at diamond though, we're on its way to actually starting to fill this gap. Let's actually go to hourly chart here. So we saw a gap here. We are already starting to, we're just right at that level, right? We're just right at the gap level. And there's this gap here. So we got the battle of this downside gap and there's upside gap, right? And I think that's a good level right there. Just looking at things a short term, that's a prior resistance acting as new support. Gap it up, turn this into an island bottom, go. That would be the best case scenario, right? That would be the best if we can see something like that. Otherwise, we continue to grind higher and fill that downside gap. You're gonna see some resistance in that vicinity, and that's the level we're seeing this downtrend resistance. So let's keep an eye on this level, right? Keep an eye on 259 level, the gap area, and then let's see how it deals with the next week. Again, we gap this up. That would be the best case scenario. Maybe then we can definitely go back up to 262, retest that level. If not, we're probably gonna come back in, challenge that gap again. Nasdaq holding up very, very well here. So there's This is a level that we talked about last week, 177.50, and there's that gap. That gap got filled, right? That gap got filled, right? And that's where we found support. This is why we track gaps here, right? You see that gap right there? That gap got filled because this was last Friday. So we saw that gap got filled. That's the level coinciding with the 20 MA. So the gap filled, coinciding with the 20, we saw the dip buyers coming in. So let's remove that, right? But bulls have so many gaps. Look at this, how many gaps bulls have opened. There's no gaps on the downside. One gap actually, there's a little small gap right here, right? But we got one. I mean, this is technically open too, right? There's a small gap there. Let's check that. Let's check that out. Yeah, man, right here. That's, I mean, going to hourly chart, that's actually a pretty sizable gap right here. See that? So I can do this, right? 1, 2, 3, 4, 5, 6, 7, 8 up gaps and 1 down gaps. 1 down gap. Oh, well, we gap today. It is technically still open, yes. There, right? That's where it gapped up. Again, bears trying to fill all the way. See, this is what happened. A lot of times when the gap is open, and then you know, and either bear or bull, they fail to close the gap all the way. A lot of times it is. So this situation, bears fail to fill this gap all the way down. It is a bullish signal when they fail to fill it all the way. And now they were analyzing 65-minute chart, so it is a bullish signal, not in the long term, but in this time frame, which is a micro term, right? So that's probably why we're seeing, because it failed to fill the gap all the way, we're seeing that move today, right? Again, the market is still should be open another hour and 40 minutes or so, 45 minutes or so, hour and 45 minutes as I record this video. And so far we're seeing market green today, about 0.5% on the S&P. So technically we got a small gap here. Let's do that, right? So 176, 175 level held, and that's the level coinciding with the gap. And the 20 MA is getting respected again, you know. And if we actually go to line chart, you can see the 20's been acting as support here. 20's been acting as support there. We slightly undercut it, but there. And then you can see that 20, right? So 20 does have impressive resume. 20 here, 20 there, 20 here, 20 MA there. Go back to candles, as you can see how it's been acting as support there. Very bullish price action, you know, last 3 months, how all these moving averages is getting respected here. We haven't even begun to, I mean, we retested 50 down here, late January, and then, you know, early March, but here we're already finding support on the 20 now. So things are going like faster, a little bit faster and faster, because they go up, 50, go up, 50, go up, this time 20, right? So Nasdaq looks most bullish out of all the indices, and the Nasdaq is already leading the indices with 15%, 15.5 year to date. Since the December lows, was up 27%. Let's go to Russell 2000. Russell 2000. Yeah, so yesterday, last night I tweeted out that we have potentially, we can see that this is what you call continuation pattern. Came down, right? So we came down, continued to, we saw that some consolidation and continued lower. Got up, consolidation, potentially that we could see breaking out to the upside there. But like I said on the diamond, like I was doing analysis on diamond, it might not be perfect. It might not be the most prettiest way of breakout. Sometimes market give us that. Sometimes market give us pretty breakout. But more often than not, market is going to give you some shenanigan, right? Something to make you like, okay, I'm done with this stupid breakout setup, and then market is going to finally go. I don't know how. I mean, it could go down, do this, and then make a new low, just shake people up before doing that. At this point, it's tough to calculate or forecast exactly how. But once markets start tightening up like this, you know, usually the breakout is going to be extremely difficult to perfectly time it. But so we'll look at it. I mean, we're seeing 100 SMA did active support here, and we did see a good move, and that was actually what? Yeah, 27% move as well. And we're seeing a little bit of pullback here. We're just so far. We pull back 6% is not bad, and good consolidating move here before continuing higher. And I do think these indices going to continue to higher and reclaim all-time high and beyond, and that's been my long-term forecast. But right now we're just kind of digesting, consolidating after 20-25% run here last 3 months. Let's keep an eye on that. Semiconductor. Semiconductor, obviously we talked about this level. It's a prior resistance, new support. Look at how it perfectly respected, and we saw a gap up today. And gaps are always a good thing. And semi is a little bit gappy than other indices, but still is a good thing there. Semi's been very docile, right? I mean, you can see it's been respecting technical levels almost perfectly. I mean, you go up, retest this prior resistance almost to the T, right there, respecting the 50, and it conveniently gets above this downtrend resistance, and then pulls back and retest it, right? And with the gap up today, and you can see 50 and 200 crossing to the upside. That's a good sign. And you can see 100 SMA crossing back to the upside as well. Let's make the 100 SMA a little bit more. I'm gonna make the 100 a little bit more darker so you can see. Do you see it? I made 100 a little bit darker here. So one last one. I'll let you guys go with this. Banks. This gap held. Again, these levels we're talking about last week, 25, 24, 24, 86. The level held. That's a good sign. Technically, we opened up another gap. You know that? That opened right here. There's a gap. Here, let's go to hourly. See? Again, this is what I've been talking about today, right? What was the whole theme of this week? Or not this week, but this presentation, this video today. When the bears failed to fill the gap entirely, that's bullish signal, right? So what happened was we gapped up here, and this was like last week, right? Or this week. This was actually this Tuesday. So we saw a gap up, bears came down, failed to fill this gap, and remained it open. That's what did it. Made this move, right? So we actually got another gap. We can do like something like this, because this gap remains open. Again, that gap was not filled. Bears tried it to fill the gap all the way, but remember the gap started from here. So the gap remains open, and then we open another small gap. Still bears failed to fill that gap, and then we got up here. But now this down gap is here. So now the down gap wasn't filled, so now we got the bearish action. And banks, you can see, doing worse than the indices because of this gap, this down gap. We're just kind of retesting that gap, not able to fill it. Does that make sense? So let's fill this gap and then kill that downside momentum, and potentially market or the banks could continue higher. It does look like potentially invert head and shoulders on the banks. I like the fact that it made new low. See, this is where a lot of people will say, well, look at this. It's going to go, it's old resistance or old support become new resistance. It's going to do that, right? That's what you're going to see a lot of these quote unquote gurus or technical masters are saying it. What this was is, again, when you start to see symmetrical patterns like this, people like to go long here, place their stop here. Market don't like that. Market doesn't like that when you think you can figure out these stupid patterns and somehow you're going to profit consistently. So market, what it does, comes down, takes your stop, and then goes back long, goes back up. But what it does is, okay, you got stopped out your longs, maybe it's time to short. Short it here, place your stop there, and then what the market a lot of times do, takes your stop of that short position, and then finally you got tired of trying to trade this, and then you say, well, I don't want to trade banks anymore. And then as soon as you want to be done with it, that's when this thing finally breaks out. But that's the market that you're dealing with, ladies and gentlemen. So don't try to focus so much on these patterns, these short-term patterns. Try to understand more of what's really going on in more of like an intermediate and the primary term, and give it more weight on that. And then trying to figure out, okay, what is everybody really thinking about at this point? Well, a lot of short-term traders think that this is bearish. And a lot of times it's going to be opposite. Because a lot of these short-term movement, it has nothing to do with the fundamental data. It is almost every single time is psychological. So think about more of a longer term and then think about what everybody's thinking. And a lot of times what everybody's thinking is wrong, right? And so if you can kind of strategize in that way, I think you will have a better success for your trading practice, right? So one last look at Spyder. Yeah, we're still holding that level there. Again, as I close this video, market should be open under the hour and a half. So keep that in mind. We'll follow up these levels again next week, right? We'll check out 282, 280 level next week. Again, this gap area, 285, 283. This gap, let's see if we can see the bulls can fill that gap or maybe gap it up, do an island bottom. And then we'll follow up again throughout the week. I tweet out certain things and charts and things if I see something. So you can follow me at 2K Kim on Twitter as well. You guys have a wonderful weekend, and good luck trading next week.